Welcome everybody, my name's Michael. I will be your host today from the cryptocurrency YouTube channel Kubera. Today's a short topic, it's a simple one, how to find addresses using Etherscan of whales. And what a whale is, essentially it's a larger trader. Now that does not necessarily mean it has to be a millionaire trader. For smaller DeFi projects, it just means that they're larger transactions. Currently we don't have any large transactions for this specific project, but it can be for any project, and if it's a small enough project, something like $20,000 might trigger huge market moves, while for large projects, even for a top 50 or top 100 on CoinMarketCap, it's not going to really put a dent into it. However, if for Bitcoin or Ripple or Ethereum you see a large transaction, I'm going to show you a couple here. This is from Twitter, from Whale Alert, something like this, 500 million XRP, 119 million US dollars. That is a huge whale at that point. Even in the stock market, anything over 100 million, anything over $50 million or near that is huge. It could be a hedge fund, it could be a billionaire investor, it could be a nice big pool of millionaire investors. It could also be an exchange, because sometimes you just have tens of millions of dollars in Bitcoin or Ethereum that you need to send from one wallet to another. So sometimes it's just an exchange. Exchanges make up a sizable portion out of the all-time high, most valued Bitcoin wallets. So Whale Alert is quite fun to follow because sometimes you have extreme trades on here. For example, you had liquidations of shorts that were valued at hundreds of millions of dollars, and the community would like to say that those people were wrecked. But then sometimes you see something that's a little suspicious, something that just doesn't make sense. Sometimes these whales know something that you just simply don't have any possible way of knowing. Maybe it's insider information, maybe it's outside external events that will have an impact on crypto. So sometimes if you see something that spots your eye, the news picks up on this, because in the crypto world, even more so than in stocks, a simple event can definitely transform the entire environment. So before we get into the details of why this is useful knowledge and how you can use this to copy these traders, I'm just going to show you a simple example. This is with the token over here, Hex. We're looking at the Ethereum pair for Hex. We scroll down to transactions on uniswap.info, and we see transactions, the total value $56, $800, $2,000, $2, 4 pennies, $4,000, and we start to get a sense, all right, so, a few $100s, a few $1,000s, it's nothing out of the ordinary. But then you see something like this, it spots your attention because it's over 1 million Hex. This one here is $13,723, and this one's $14,990. So we click it, and we can see the exact details. It was a swap of a 1,092,000 Hex for around 38.45 Ethereum. We see where it's from, so you're able to click on that, and then we see that the Ethereum value currently is $260,000 for this wallet. Let's go back and let's double check, because these two look very, very similar. Two amounts around $14,000, both at the same time, probably within the same minute. So let's click on this, let's double check to make sure it's not from the same address, and we see it is from a different address, where this one's Ethereum value is only $95. So that's okay. There was a lot of Ethereum that was moving through here, but we've already found an interesting whale, a mini whale, an orca, a shark, I guess you could say. It would be this individual with the $260,000 in his wallet. We see that there's a lot of transactions going through. Most of these are around Hex and Uniswap, and this one's valued at 10 Ethereum, and most of them are very small transactions. This is just an example, but you might be able to find wallets that suddenly have an Ethereum value of $5 million, and instead of many small transactions, you see rare large transactions where each transaction is a few $100,000. I used to use this social media platform called Steemit, where you were able to see whales who had addresses that were worth millions of dollars, and it always made you question, if they were selling large amounts, why were they selling? If they were buying, did they know something that you didn't know? So these individuals are swapping Hex for Ethereum. Now, these aren't large transactions. There was one earlier that didn't show up because it was 31 minutes ago. For some reason, it only shows the first 20 minutes, then it shows an hour. And all right, that's okay. It skips between because there's a lot more transactions happening. But this individual swapped 2 million Hex for 73.35 Ethereum. So the total value, this is $27.5 thousand in hex for wrapped Ethereum, and it says the 73.35 is worth $28,916. These are still not large transactions. Hex is a pretty big DeFi project, but for smaller projects, this definitely could change the environment for the next hour. Let's click on this address. Let's just double check. All right, so this address is actually even more valuable. This one has $281,000 of Ethereum on it. And we also see something very, very similar, Hex Uniswap 000 10 Ethereum. So you're able to go and individually just look at what's going on. And why is this valuable knowledge? Well, if you've already made up your mind whether you want to purchase or sell whatever DeFi token that you have chosen on Uniswap, and let's say you go down here and suddenly you see something that is a total value of $350,000 while all the other transactions are at maximum a few $1,000s, you would probably want to check out what wallet is that coming from, how valuable that wallet is. The more money that's inside that wallet, the probabilities are good that it is a multimillionaire investor, a hedge fund, a company, a large investing pool, maybe even a billionaire investor. They might know something that you don't know, so you might want to double check if there's any news that's coming out. You might want to hold off on your purchase, or just might want to stick around for the next hour, see if there's any other larger transactions, because what happens is we already went through and explored 3 different addresses, but over the past 2 years, what a lot of multimillionaire investors have discovered, it's not as safe having all of your money on one wallet because people are still able to see how much money you have on your wallet. They want more security. They know that blockchain is transparent, but they don't want some of this information being fully out there. So what they do is maybe they have 20 wallets and maybe they're investing from a few wallets at the same time. So that could be the same individual. We're not sure. So that's maybe why you might want to stick around for an hour, double check. Oh, if you see another transaction and then suddenly the price is beginning to fall down, you might wonder to yourself, well, maybe there's some insider information going on. So with that example out of the way, what is copy trading? I chose eToro here because probably as myself, if you watch a lot of cryptocurrency YouTube videos, you will realize that there are a ton of advertisements with eToro, and eToro is a traditional investment platform. However, they've also gotten into cryptocurrency. They're huge on copy trading, and we're going to explore what is copy trading and why a lot of professional traders advise against copy trading, but it is always something to think about. For traditional, the main gist of it is this. You have millionaire investors who, using a platform, you're easily able to copy all of their trades as long as you have enough money in your wallet. If you don't, you choose limits, you choose how many of their trades you want to copy, or you might want to choose a smaller portfolio from a trader that's still doing pretty good. Copy Trader allows you to view what real traders are doing in real time and copy their trading automatically. When they trade, you trade. Whether you're a beginner learning the basics or you simply don't have time to watch the markets, now it's easy to leverage other traders' expertise. The average yearly profit, they're advertising here as 29.1% of our 50 most copied traders for 2019. But that's for the entire year, and there are definitely risks. So a newbie investor might think, whoa, this is pretty cool. I'm a beginner. I don't know anything about trading. So let's immediately copy the best investors. But why doesn't everybody do this? Well, there are some risks. First of all, that 29.1%, that could be really great for 2019, but for 2020, where you had this black swan event, a lot of those investors, the same investors, probably weren't doing as well. Some maybe would have lost money within the first few months. They have their reasons for making these trades. Most likely they're doing this as a full-time job, or they're definitely giving a few hours every single day into research, even if it is a very high-paying hobby of theirs. You don't have that research. You simply don't have time to watch the market, so you don't understand what's going on with Apple or with Amazon, or why, this is a crazy example with Hertz, when it was going into bankruptcy, there was a pump happening. So even though you're copying their trades, they're still going to do better than you. Because the first signs that you are losing money, they might not back out, whereas you will, and then you're at a loss. They might know what's coming up next month, so even if the stock's falling down, they understand that, hey, if we wait this out, they're going to release this update. There's going to be this event happening. There's going to be a great Q3 report, whatever is the reason, he's going to stick with that. You might freak out and decide, you know what, let's get away from this. And then you go to another trader, you copy him, and then you lose some money on that one, and you constantly keep repeating. The other thing which happens definitely on crypto, you certainly don't have platforms that you just log in and select, hey, let's copy this DeFi trader right here, which means you're going to have to monitor exactly what he's doing. If you found, for example, through Etherscan, an address that's got millions of dollars, there are advantages, but there's also disadvantages. It's all about timing. That whale might have bought at the perfect time, whereas even if you're only 5 minutes late, sometimes they do really quick trades. They pump it up very quickly within a few minutes, and then they sell and they dump on you. So by the time you have bought, you might already be losing money. Now, most likely you just didn't do it within the first 5 minutes. Most likely you're doing this hours or maybe even a full day after that individual is making their trade. Even if you come out with profit, you will never reach the same amount of profit as they do, because they have their reasons, they have their limits. They know exactly when to sell, when to purchase, what to look out for. You're just copying them. You're just trying to get as much profit as you can with the hopes that, hey, you're going to do better than if you just did the research yourself, because you're still a newbie investor. It's going to take you maybe a year, maybe 2-3 years. In reality, 95% of most investors lose money in the long run. Now, that's not for crypto. That is just for stocks. That's just for general investments. You might hear that and you might be turned away, but that's just the truth of it. For day traders, for people who don't really know what they're doing and they're going to be making a lot of small trades and they're going to panic, you can't get as emotional. So the best strategy that you can do is find an address, look into potentially why they're purchasing or they're selling this token, do more research, double check on the token that you're interested in purchasing. If there actually are events that are upcoming, maybe a mainnet launch, maybe the CEO is getting swapped out, maybe there's a hard fork, maybe there's an airdrop, whatever the reason, if it seems good, if there's good PR, if it's hyped up, if the community's really loving it, then thanks to that main inspiration, the first wallet that you saw, that first large transaction, after a little bit of research, you don't have to spend all day doing this. If you see, hey, everything's looking good, you might decide, all right, let's go through with it. Then you're just going to monitor that wallet. If they decide to sell, again, look into the reasons of why, what's going on over the next few days, next few weeks. You might decide to sell as well. So a lot of crypto traders have been asking on Reddit, can they do co-vesting? Can they do these copy trades using PrimeXBT? So this is the more popular option, I guess, for cryptocurrency as well. Discover a smarter way to trade. Choose among best performing traders and automatically copy their trading activity. Copy the leading traders in 3 simple steps. Choose a trader, set the amount, and click follow. So setting the amount, again, it depends on your limits, how much you're willing to allocate, how many trades you want to copy, because some of these guys might be doing 100 trades per week. Others might be doing 50. Co-vesting allows platform users to browse through hundreds of trading strategies provided by other traders and automatically copy their trading activity. And we see that today's profit, 6.3% from a total profit of 2.4,000% from Mr. Number One. He has a total of 2,267 followers. And there's also another issue. If it is a large cryptocurrency, or this even goes for stocks, having 2,000 people make the same trades, it will have a slight impact. But if it's going to be a much smaller cryptocurrency or a much smaller stock, it's definitely going to make an impact on everybody's profits. If you have 2,267 people who are copying this one dude, almost 2,300 people buying and selling around the same time, around the same amount, to outside people, to outside investors who are looking at that, they are going to be frightened. The price is going to drop. So overall, in the long term, it might look good, but for individual projects, if it's small enough, it will have an impact. This one has a 1,100% total profit. This individual 500%, but we see that most of them, it's nothing crazy. So if you were to go down this path where it's not going to be DeFi, it's just going to be larger cryptocurrencies, you do have to watch out that, hey, this guy is doing 6% today profit, but this guy just lost 12%. So you could lose 10%, 15% of your money very quickly within an hour. One bad trade, right? Maybe if you did your research instead, you wouldn't have made that trade. Now, in the long run, sure, there's profit, but this individual with 265% has only 38 followers. It's kind of sketchy that For some reason, it was kind of flatlining for most of it, and now suddenly it just went up. While this individual with 274% total profit, not too far off from this individual. Probably the sketchiness is why there's so few followers, and maybe he's just brand new to it. Maybe got really, really lucky and his next calls are going to be really bad. But we can see a huge jump in followers here, 539. So if someone has a lot of followers, I wouldn't want to necessarily be following them. You'd have to average it out for whatever the percentages are, for whatever platform you're using. If you see something that just jumps out at you, that there's way too many followers or there's way too little, it's going to be a little bit sketchy. So I wanted to show you what research might look like. This is an article here that says 2 Ethereum whales move 53,000 Ethereum as DeFi tokens gain popularity. In the Ethereum world, traders or investors who own a large amount of Ethereum are typically called whales. Here is our trusty whale alert. 28,000 Ethereum moved to Kraken. Seems large entities, or better still, whales, are showing renewed interest lately by moving the second most valuable crypto asset more frequently as DeFi tokens gain traction. A lot of DeFi projects are under Ethereum, so that's why the obvious option is Ethereum, but then you're using wrapped Ethereum if you get into DeFi. Anyways, in total, $20.9 million was transferred from Kraken to an unknown wallet and vice versa. This was earlier back in late August when DeFi was really popping up. Why this move? Well, it believes that the recent whale movements are triggered by DeFi. Looks like this article doesn't give that much information, but this could lead to another article. You see that, hey, maybe you don't have all that time to go on Whale Alert. While this is a simple article, it leads you to another article, and then it leads you to maybe forums, and then you start to figure out all the little puzzle pieces. This is actually a little bit more important. Ethereum Genesis wallets of 700,000 plus Ethereum move big blocks into DeFi, and this is actually one day before that other article. So that this article, the first one that we read, might bring you to the second article, and you realize, whoa, holy moly. Medium is a great source for crypto bloggers sometimes. If you find a really, really good crypto blogger, they go into the full details. This is actually discussing Hex. That's why I wanted to show you earlier with Hex, because of this article. Chainalysis revealed 700,000 plus Ethereum. So he did a little visualized graph here, sampling 25 real blocks visualized and magnified times 10x. Look at all those connections right there. Running Chainalysis on Hex, the first high-interest blockchain time deposit, discovers a surprising amount of whale activity. It should be noted that there are many Bitcoin wallets with hundreds of Bitcoins, and in some cases even thousands in single wallets that have been observed on-chain participating in Hex. This article encourages you to do some exploring on your own. You may be very intrigued by what you discovered. Now, these are proper whales where it starts to get really into it. Here we see two different Ethereum Genesis wallets having 400,000, 440, and 310,000 Ethereum respectively, picking up big blocks of Hex and staking it all. So it goes into, this is what I love about this Medium blogger. He highlights everything for you, so you know, all right, here's the address, here's the transaction hash. He highlights it. All right, it is Genesis, 400,000 Ethereum from Valley, 200,000 Ethereum. Ethereum Genesis wallet number 2. You see the Hex buys. There we go. And now it's no more 0.00000 value. It's huge amounts. 681 value, 312, 100, 1,000, 10,000, 3,000. It's all split up, right? By design, Hex enriches its staking class. Hex Staker 5,500% ROI and a 29% APR. So these whales are onto something here. It appears the owners of these Genesis wallets have researched Hex and understand its design. Immediately after purchasing, they leveraged their positions by staking strategically. The stakes they created capitalized on two of Hex's simple staking design features. Longer pays better and bigger pays better. Their stakes are viewable here. So what does this mean? Well, we see this is where we're at, 2020, and we see one date at 2030. We also see one date at 2034. So they're thinking long into the future, more than a decade from now. So that is because they're going to just get more higher percentages at that point. So the last article over here, the Alpha Wars, how DeFi traders can copy their way to millions just by copying whale traders. Just as DeFi forks are copying long-standing protocols, some DeFi traders can take a hefty profit from large whales. Key takeaways: public blockchains aim to incorporate a mix of transparency and privacy. A lack of on-chain privacy measures threatens the informational moat of DeFi's biggest whales. Tracking whales and mimicking their intricate trading strategies can be a source of alpha for savvy traders. This advantage will not last forever, as privacy on Ethereum is imminent, and there's also Ethereum updates, huge updates coming up. DeFi whales use their millions of dollars to amass more millions and move markets. Smaller traders with less capital and more patience can copy the success by tracking their every move and mimicking their strategies. Piggybacking off the fortune of insiders and whales has never been this easy. Public blockchains, privacy, and DeFi. The ability to publicly audit transactions and the state of an accounting ledger is integral to decentralized networks. But it's far from ideal for privacy-centric users. Very few users have made privacy a high priority for the industry. It's still important, and resources are being allocated to build these tools. However, they're still not in action yet. I mean, and even if it does get developed, it's still going to take a while before a lot of people are using them. Unlike Bitcoin, Ethereum's usage isn't restricted to a single base layer coin moving from address to address. So while if you're tracking a big whale Bitcoin address, unless you have also millions of dollars and he's just trading Bitcoin on a daily basis, that's all you can really do with it. Figure out when to buy, when to sell, and just wait for the next trade. While with Ethereum, you see that there's hundreds and thousands of different tokens. And you might see that this whale wallet suddenly is investing, let's say, initially he invested in Hex, then suddenly you see a new large transaction to some project XYZ that you've never heard of before. You do research on that project and you figure out, whoa, this one's a golden ticket winner here. With the rise of DeFi, there are tons of opportunities for users to take part in this. Thanks to yield farming, the practice of tracking and tracing specific addresses has undue alpha. Tools like Nansen and HAL are invaluable for tracking address movement. So if we click on this, actually let's go on both. This is more for somebody who's like really gung-ho about this, Nansen.ai. And the reason I say that is because you have to pay money. It's not a lot. Start a 7-day trial for $9. So this is just a trial. And if you go to pricing, we see that it's $149 per month, or you can go really hard and $1,400 per month. So the average newbie trader who doesn't have more than a few $100s isn't really going to be using this. But if you're gung-ho about this, it might be something to look into. So if we go to HAL, we can see, all right, so let's explore what's going on Uniswap. Track token purchases, filter by token quantity and buyer address, use recipe. And then we're able to select a token. Let's just say we're using Hex. It's asking us for a pair, so let's just say Hex and wrapped Ethereum. Whether it was Hex or wrapped Ethereum that was being purchased, how much more than this? It would ask for the user address, and then you could say, send me an email or send using Telegram, name this trigger preview, and there we go. Using HAL, you can build any automation on Ethereum in seconds. Nansen has wallet labels that help users digest information. For example, users are labeled based on their DEX usage, the size they trade with, and any known public labels. For those that don't want to purchase these services but are willing to put in the effort, Etherscan is just as good. Exploring 2 examples of how to track large whales should make this much clearer. Alameda Research is one of the world's largest crypto market makers. So let's click on Alameda Research, and we see that they currently manage over $100 million in digital assets and trade $600 million to $1.5 billion per day across thousands of projects, all major coins and altcoins, as well as their derivatives. So this is a huge crypto hedge fund that you could follow and be like, whoa, all right. So if they're making some new investments into new projects, you could really ride them for a good amount. A good example of this, well, if one can find a new farm that Alameda deposits a few $1 million into, they can reliably take advantage of this opportunity for at least a few days. Though the DeFi space is full of risks, companies deploying billions of dollars have more resources and know-how than the average day trader. When everyone was busy deciding whether SushiSwap was a scam, Sushi was definitely an interesting project to say. Alameda deposited a few $1,000,000 into the contract. Taking this as a sign to enter, farmers would have made a killing with just a small chunk of capital. Drawing from the sushi example again, one can use whale behavior as a proxy for fishing for tops and bottoms. Sushi was in free fall after Chef Nami's exit dump. The community was in shambles and all hope seemed to have been lost. Then a lone whale entered to catch the plummeting token. Newbie.Ethereum is an on-chain legend known only by their ENS name and is often responsible for creating the tops and bottoms seen on price charts. At around 5:40 a.m. Universal Time, September 6th, Newbie pulled the trigger and bought $1,000,000 of sushi. This buy order marked the bottom for sushi, and the token rallied almost 200% over the next 15 hours. That is pretty crazy right there. There was Newbie buying sushi. In the equity market, this is the equivalent of knowing which stock Warren Buffett is buying and when he's buying it. But DeFi whales aren't idiots, and this is what I was discussing earlier. This individual, wow, only 15 to 20 addresses? I have a massive spreadsheet to track all my addresses. Yup, waiting for privacy solutions to not have to do this anymore. So some of these individuals have between 10 to 50 Ethereum addresses, maybe even hundreds of Ethereum addresses, where some of these addresses have hundreds of thousands of dollars or millions of dollars. If we look at Newbie.Ethereum, his Etherscan address currently has just an Ether value of $25,000. But if you look at his tokens, there are $333,000. And we can see that he has $237,000 of quant. So this might be an example. Hey, why is he mainly in quant? He has $20,000 in DXDAO, $55,000 in Octus. And then you'd look through what's going on. Oh, here we have a 40 Ethereum transaction. Here's a 2,200 Ethereum transaction. So let's follow this. Where did it go to? It has an Ether value of $8.55. I see that it went to Binance. All right, so he's cashing out. So you have to be careful. DeFi whales are definitely going to try and hide their activity. So exploit the advantage while it lasts. It definitely does have a lot of risks to it, and that's why I wanted to go through everything today. That would mark the end of today's video. So thank you so much for getting to the end over here. It's not normal to be able to copy the most successful investors in an environment. Traders looking to exploit this edge should move fast so they can wring this opportunity for all it's worth, because soon it won't be possible. So thank you. See you in the next video. Have a great rest of your day. Bye.